Hey everybody, this is Tanner Invest here. Thanks so much for tuning in. Today is an exciting day because the FOMC meeting with the Fed just happened, and Jerome Powell has decided with the committee to go ahead and cut rates by 25 basis points. So today I wanted to talk about how that affects cryptocurrencies specifically because on this channel we're big into the digital asset treasury companies like BMNR under Tom Lee. We also have Sharplink Gaming. Now we are looking at Dan Ives and his new Orbs company, which is pretty cool. But then also there's a lot more treasuries out there that I haven't even gotten to yet. So I wanted to make this just short and sweet on, in my opinion, like why I'm really excited about rate cuts for crypto. I've done a lot of research just to see like in past cycles what's happened to the cryptocurrency markets, and it's been pretty great. So hopefully that will continue to happen. Alrighty, so let's go ahead and hop into the video today. Let's start out with Fundstrat's Tom Lee. There's a nice CNBC meeting he had, a little interview, and let's hear what he has to say on what will increase whenever interest rates decrease.
You alluded to some of the places that could see the biggest impact.
Yes.
But can you take us through those? If you had to put a top three together about where you think the most activity or juice could come from if the Fed were to embark on this path. I think of maybe home builders. I think of other parts of the market, maybe technology based on valuations. But in your mind, what are the places that are going to reap the most benefit from that?
Yeah. So I'm looking at September 98 and September 2024 as the playbook, because those are both years where the Fed was on extended pause and they cut in September. The number one trade is NASDAQ 100. So I think that's why the Mag 7 and the AI trade gets a lot of lift off. The second is monetary liquidity sensitivity, global central banks easing. That's Bitcoin and Ethereum, and seasonally strong. I think they could make a monster move in the next 3 months, like huge. And the third, of course, is interest rate sensitives. That's really small caps and financials, but really the first two might be the standout trades.
All right. Because you mentioned the crypto side of things, you're actively involved now. It's not just a thing that you're doing on the side. You are very much engaged in the business of crypto. You govern, you oversee crypto assets
By
now.
Ethereum. It moves with a lot less friction. So Wall Street is building on the blockchain because they can rebuild a lot of their infrastructure on a public chain, really improves trust, and there's a lot of resilience and censorship resistance. Banks' biggest cost is labor. That's something they can save by moving on to the blockchain.
We've talked in the past about tokenization of markets, specifically the stock market. Is that something that is perhaps better indicated for certain types of blockchains versus others?
Yeah, there is already a lot of effort to tokenize. Robinhood is leading that effort for retail investors, tokenizing stocks, which allows you to trade it 24/7, which is a benefit, and with a lot of transparency. They're building these on Ethereum or a layer 2 of Ethereum. So Ethereum, which is the second largest blockchain after Bitcoin, is where Wall Street is choosing to build these tokenized securities.
All right.
All right, guys. So as always, Tom Lee, obviously he's a little bullish. He's got some skin in the game now. But I am really excited. Obviously, every time he speaks, I want to listen. He has been the number one economist in the past few years because he's been bullish when a lot of people have been bearish. And so I wanted to go ahead and hop into specifically more about the Fed funds today, the FOMC meeting. So we need to remember that the Fed Reserve has a dual mandate, which means they have two goals, right? The two goals that they have is to achieve maximum employment and price stability. So maximum employment is the level of employment at which everyone who wants a job can find one or is likely to find one quickly. It fosters broad-based economic opportunities for all Americans. Price stability, this means that prices for goods and services are stable and predictable. Consumers and businesses can make plans without worrying about significant price increases or decreases. The Fed aims for a 2% inflation rate as measured by the PCE price index. So the reason why I'm bringing that up is because the meeting today, if you guys didn't hear Jerome Powell speak, was pretty interesting in the fact that he said, it's a balancing act between these two dual mandates, and that right now they're favoring the employment piece because payroll data came out recently and was not the best. Now, price stability, on the other hand, is still something that they got to keep an eye on. goods have had an increase in inflation as of recently, but services have not. They've actually been a little deflationary. And so right now, they're weighing the employment side a little bit more, and is why they decided ultimately to have this 25 basis point cut. And the committee members have an average saying that there will be 50 more basis point cuts by the end of the year. So we're looking at a total of 75 basis points cut by end of year potentially. That's what the average committee member has voted basically by themselves. So that's their own opinion. So that being said, I wanted to hop in because I have a lot of articles here that I just wanted to show you guys quickly and why this all matters for cryptocurrency. So here's a quick look at the Fed funds effective rate. This obviously is going to be cut by 25 basis points in September. So we are seeing that go down, which is great. We need to look at this article first by CoinLedger, because what are the long-term impacts of interest rates on crypto? More liquidity, high risk appetite, more development, and a weaker US dollar. These are all benefits to crypto ultimately. So what that means is, one, when I think of lower interest rates, the first thing I think of is more liquidity, because we have something like this going on with the money market funds getting absolutely out of control. We're at $7.48 trillion sitting on sidelines right now. And you can see in time periods like 2020 through 2022, where there were lower interest rate environments, people stopped putting money into money market funds. That liquidity, instead of going into a savings account, a bank account, things like that with a high APY, or a money market fund through a brokerage firm, we now are going to be putting that money into the stock market or into higher risk assets like Bitcoin, cryptocurrencies, things like that. So like, it's funny because I have a buddy who has money in SoFi, and he keeps telling me, hey, SoFi keeps dropping their APY. And he actually just told me recently that he bought some crypto. So like, multiply that by like hundreds and hundreds and hundreds of thousands, or even millions and millions of people. And that's how you're going to get these effects that end up having a positive impact on cryptocurrency. So I wanted to talk about that. That's basically that high risk appetite, because people are getting free, 4 to 5% APYs right now, where their money's just doing nothing. It's just sitting there collecting a return. And so when that goes away, these people are like, hey, I want my return back. And then that's when they deploy money into other vehicles. So that being said, one thing that's interesting is this more development piece. So low interest rates can be a great time for the development of cryptocurrency ecosystems. So there's a lot of venture capitalism that is involved within crypto markets, and things like using venture capitalist firms, their money, their borrowed money, to be able to create new blockchain technology. There's actually an article right here. This is an S&P Global article from 2023 that actually says, for example, financing costs influence venture capital firms' decisions to invest in startups that want to build applications on blockchains, such as Ethereum, and consequently drive blockchain adoption. Likewise, for blockchains that lack an application layer and only have a transaction layer, such as Bitcoin, higher costs for financing mining rigs and warehousing space will lower marginal profits for miners. So that's really good for cryptocurrency. So just like any other small business, small cap companies, they likely need more money. They need to borrow more than these huge Mag 7 companies that already create so much cash flows themselves. There are companies out there that need to borrow money. So with a lower interest rate environment, they have a lot easier of time borrowing to then innovate or grow their business. So that's going to be the same, hopefully, network effects that we see within the Ethereum ecosystem. So I'm really excited about that. I also wanted to share this Coingecko article. I really like this one because they have so much graphs in here that show the difference between like what happens whenever rates cut compared to price of cryptocurrencies. And this intro here really says it all. We can see this purple line here is the federal funds rate. And then the black line is the price of Bitcoin and USD. And we can see, I mean, there is a clear, like, when the rates go down, the Bitcoin price has gone up over time. And whenever, we can see whenever rates decline, Bitcoin typically goes down as well. So this correlates, obviously, the exact same as what we looked at earlier with the federal funds rate. And it coordinates with the money market funds, because as you see, when there's periods of time with this flat amount in the money markets, instead of it having a steep incline, that's when the interest rates are lower, because they're not growing. Money markets aren't growing as fast whenever interest rates are lower, because people are putting their money, like I said, in other vehicles. So this article is not really that not really much, kind of boring. I'll skip that one. But I did want to talk about the price action of BMNR. It was very interesting during the FOMC meeting. It was like a roller coaster. We can see here when he started, you know, when they released that there was a cut, it plummeted, and then he started talking, and then it plummeted again, and then now it's back up. So, hey, we're good. Bitmine is up 2% on the day. That's great to see. Really excited about BMNR. It's been, you know, performing extremely well. I'm up 27% on this position. SBET is still performing well as well. We're up 1.0% today. I have noticed, though, and I'm sure everybody else has noticed, that the BMNR has typically been going up more and down less than SBET has throughout the last few weeks. So we'll see. I know Joseph Lubin has been cooking some stuff. Linea has been launched. I think it's been really successful. There's some really funny stuff coming out. I'll talk about that more in my next video. I'm actually going to be diving into SBET and BMNR. Typical of my series on those two companies. And I want to obviously follow more of Dan Ives' new company with ticker symbol ORBS. But that being said, guys, hopefully you learned a little bit today, and hopefully this was an entertaining video at least. I know I was pretty entertained today with the FOMC meeting, as were many other retail investors. So we're looking good, guys. The rates are going to be dropping here soon. And hopefully if you guys have any projects, or you want to buy a house, or you have, you know, want to buy a car or make any home renovations, maybe it'll be a little bit easier for you in the future as well. So thank you guys so much for watching. This is Tanner Invest, and I'll see you in the next video.